Hi everyone. We are here with Paige Collins of Hartley Fowler today to catch up on some of the government support available to businesses during the coronavirus pandemic that we are finding ourselves in. Some of these schemes have been in place for a while, others are fairly new. So to start off with, Paige, how are your clients finding the schemes available and how easy has it been for them to access them?
Hi, Kat. Well, going through the various different types of scheme, there are quite a number that the government have brought in over the course of a number of weeks and the months as it is now. There was initially the rates scheme for small business rates payers, and the government were giving, or the councils were giving grants of between 10 and 25,000, depending on your size. Obviously, the furlough scheme, much has been written about the furlough scheme and the support that has got, and that has now been extended to October, but with some additional details to come about what might happen sort of August, September, October in terms of more flexibility for workers to come back to work on a flexible basis, and actually reduction of the government support during that period of time. There's also been the business interruption loan scheme, and much has been written about this as well. And although a number of our clients have actually applied for the schemes, not all have been successful. And I think the banks have been quite slow in terms of providing sort of facilities along these lines for the interruption loan scheme. There's also the self-employed income support scheme, and that has been widely applied for. I think some 2 million self-employed people have applied for the income support scheme, and certainly all of our clients that could register, have registered, and have actually received some monies coming in now. So that's good news from the self-employed point of view. Of course, also there's the VAT and income tax deferment schemes. So this isn't a grant or a contribution towards anything, it's just a don't pay your tax now position. With VAT, any VAT that's due between the 20th of March and the 30th of June can be deferred and has to be paid before the 31st of March next year, the end of the tax year, 2020-21. The income tax deferment is the second payment on account on the 31st of July, which can then be deferred till the 31st of January next year. But again, both of those are still actual liabilities that will actually arise.
Okay. A fairly recent addition to the government support has been the Bounceback loan. How has that been received by your clients?
The Bounceback loan is an extension of the interruption loan scheme that the government initially announced, and is available to sort of smaller businesses basically. And it provides loans of 2,000 to 50,000 and is based on 25% of your turnover. And it's an online application, less compliance than the interruption loan schemes, which have been much slower to be passed through the credit teams at all the major banks and actually been forwarded on then to in terms of cash received to clients. And a number of our clients have actually applied for the Bounceback loans and have had success very quickly. And I think, generally speaking, most sort of businesses have been trading for a number of years, haven't had any problems at all with receiving the loans. I think some newer businesses have had some difficulty receiving loans because they don't have a trading history. And that's just something to bear in mind.
Okay. We had a question about the Bounceback loan from someone who's asking whether they could take the Bounceback loan now, although they don't need it at this particular point in time. What would you say to that?
Well, the Bounceback loan is obviously to provide assistance to businesses who've been impacted by the coronavirus and the pandemic we find ourselves in. Now, some businesses haven't yet been impacted, but who knows in the next 3 to 6 months whether they effectively will have been impacted by the virus and the impact it has on their businesses. So I think the answer to that is, if in doubt, apply for it now while it's still available. The first 12 months is interest-free, there's no arrangement facility, and it can be repaid without penalty at any time in the term of the loan, which is basically 6 years. So I think it's a good option for businesses to just future-proof their business against any potential impact that the virus might have on their business going forward. But it is a loan, it has to be repaid. So don't just take the loan and spend it on things that perhaps you don't need to.
Good advice. Another question that we got was this: as an owner-managed business, are there any pitfalls to watch out for with the support schemes?
I think the major pitfall with the support schemes is not the schemes themselves, but the impact it has on your business. Cash flow is very important, and of course with all of these schemes there are often cash being received, some of which has to be repaid, like the Bounceback loan has to be repaid, the other loan schemes have to be repaid, and it's quite possible that the business will actually have cash in the bank in the short term, which is good news, because the whole idea is it gives cash flow so you can see yourself through the difficult times as trade actually improves again. But also you have to be very mindful that a lot of small, medium-sized enterprises, the director shareholders take their money's income from the company by way of a small salary and dividends. Well, dividends can be paid out of effective retained profits, or profits that are generated during the course of the year. And whilst a number of businesses have some retained profits that they've brought forward from previous years to use, quite a few still just sort of live slightly hand to mouth. And whilst the cash might be in the bank and it all looks quite healthy, it might mean that you can't still pay dividends because the trade has slowed down, the profits have reduced, and the availability of profits to pay dividends has fallen away. And we are certainly working with a number of our clients to manage this process for them, so they don't fall foul of the tax implications of taking money where they can't pay dividends and switching from dividends to a salary, certainly in the short term. So having a business plan and looking at your cash flow and profit forecast is an important part of this process going forward.
Absolutely, that's definitely food for thought, and really helpful to catch up with you, Paige, and find out how these have been received. As always, we would say if you have any particular questions or any problems that are relevant to you, do get in touch with the local Hartley Fowler team, and they will be able to advise you on your specific circumstances. So thank you for watching, and thank you, Paige, for your time.
Thank you, Kat.